Okay, so today you have in front of you three managers of the company. So I am Franck Guéraud, Chairman and CEO.
So hello, I am Jean-Gabriel Pointeau, I'm co-CEO.
Hello, I'm Virginie Grunianin, and I'm Chief Financial Officer.
So as usually, we are going to start by a short presentation of the company. So the revenue for 2024 was 18.7 million euro, 81 of which was invoiced outside of France. We've been growing during the last 10 years constantly. Our main product, Blackster, that you see here on the picture, has been sold and installed for more than 25,000 units. Among the 500 largest companies in the world, 39 are users of our technology, Blackster. So we are going to develop the presentation and discuss about our products, but we are offering a complete range of AI solutions on the off-road vehicle market. And the team, we have a global team of more than 75 employees based in several countries. So the geographical footprint is centered in Europe, where we have obviously our R&D production and head office in France. We have several commercial offices in Europe, in Spain, the UK, and Germany. We have a subsidiary in North America, Blackster Inc., where we do mainly sales and technical support of our customers. And then for the rest of the world, we have distribution partners in different countries. So here is a sample of the awards we received in the recent years. And we are showing some pictures of our product installed on vehicles on recent LogiMAT trade shows. LogiMAT is a leading logistics trade show that is in Germany. And being factory fitted with those vehicle manufacturers, as you may know, is one of our goals. So we consider being on their booths is a major achievement.
Okay, so now we will make a reminder on our main activity. So our historical activity is protecting people around forklifts and construction equipment. Now with the progress of AI, we are developing the system towards risk perception and toward perception technology in general. So for instance, on this picture, you can see that we are of course able to detect and localize people, but now we are also developing the possibility to consider the level of risk of the situation. So for instance, when a person is protected by a barrier, then we will consider that this person is not in risk because behind the protection, and that will avoid either a useless alert for the driver, or even sometime it will prevent the forklift to have a useless slowdown, because most of the time now forklifts and construction equipment can be automatically slowed down when there is a person detected in the danger zone. Beyond the safety, we are also now considering a complete perception of the work site and industrial sites, considering features to enhance productivity, to evaluate localization of pallets, for instance, automatic slowdown, etc. So there are a lot of potential new features with the progress of AI and hardware supporting AI. For this, we still rely on our historical artificial intelligence framework. So as we started this in 2009, we have a field-proven artificial intelligence framework with about 25 units in operation in the field, of which about 5,000 to 6,000 are connected today. So we are one of the few providers having demonstrated, proven the possibility to design new AI feature and makes a customer happy using it. That's very important. We also have a unique database of industrial sites, so it's not easy to have, as those sites are private, and the diversity is key in artificial intelligence performance. So beyond those assets, we are now also working on a visual large language model to evaluate potential new features, like I described earlier, to enhance productivity in addition of safety. And we are already implementing some artificial intelligence agent on our dashboard. So we are starting to have a proof of concept working with some of our customers for the dashboard, for instance. So still, we are addressing two channels. So our historical channel is what we call the aftermarket. So where we propose our solutions to the end users, which are large groups from the Fortune 500. There we propose what we call one-stop shop with, of course, people detection, vehicle detection, could be OSHA checklist, etc. So different kind of features. Some of them are using AI, some of them not using AI, but using the same hardware. So it's convenient for the customer. And we are developing the channel of original equipment manufacturers. So the manufacturers of forklift or the manufacturer of construction equipment, where they are now working on implementing that kind of technology, either purchasing subsystem like a camera and a software, or purchasing some technology, AI technology in the software when they have a plan to purchase only a piece of software because they already have a plan to have their own computer unit, for instance. So clearly, OEM business is a very important driver for the development of the volumes and for the development of the company. Also because it is led by all the AI development and the features that can bring AI. So our roadmap, how we see the future. So at the end of the roadmap, we believe that AI, especially the end-to-end approach, will help to imitate an experienced driver of a forklift or construction equipment, and that will be the way to scale up autonomy in industrial sites and on the work site also, because today experience shows that most of the time the industrial sites need to adapt to autonomous vehicles. And so clearly, if the vehicle is able to adapt to the industrial site, that will be clearly a driver for scale up of that kind of technology. So we don't know exactly when that will be possible, but what we know is that nowadays we have VLLM and we have AI agents who are becoming available, and also associated hardware able to run those. And so we strongly believe that we have intermediate steps where we can deliver value to the customers, bringing this technology and bringing additional features for safety and for productivity in the coming years. So we are today working on that and using our experience and our AI framework to develop that kind of features.
All right, so we are going to comment the financial results that we released this morning regarding the first semester of 2025. We start by the revenue. Early in July, we published our first semester revenue. This revenue was 6.3 million euro, so it's a decrease with regard to the first semester of 2024. We are going to come back to the circumstance under which we did this kind of revenue, but we have seen a slowdown on our market. It's driven by the macroeconomic conditions, leading the large corporations to reduce their investment budgets. And given that we are running on investment budgets, we are directly impacted by this slowdown. It's been like this for the last 2 semesters, and we now have some signals that there is the recovery is starting, but it's still weak because of the political and economical uncertainties, especially linked to the interest rates and the potential debt crisis. So those factors basically are reducing the size of our business by 30%, and that's exactly what vehicle manufacturers are seeing in the order intake. They also have a decrease of 30%, and we are going to give a few examples in a few pages. On top of that, in 2023 and 2024, we had a base effect with the last order of Blackster 3, especially the OEM Liebherr ordered the last buy order of Blackster 3 that we have discontinued. And this is, of course, creating a base effect this year. Next. Regarding the geographical distribution, it's comparable to what we communicated last semester. France is 20%, North America approximately 30%. Germany and Austria are a little bit weaker than last year because we no longer have Liebherr. And the UK and Ireland are higher than before, especially because we have a significant projects in infrastructure happening right now in the UK. In terms of product distribution, obviously with the end of Blackster 3, it's now a very small portion of the distribution of revenue. Blackster 5 is growing. It's now more than a quarter of the revenue, and more than 50% of the revenue is done with Blackster Origin. As you may know, Blackster Origin will be discontinued probably middle of next year. So little by little, Blackster 5 will overtake this distribution and will become the majority of our sales either second semester of 2025 or in 2026. So as I said, we have here a few examples of what's happening in our ecosystem. Vehicle manufacturers, so here we have an example of Manitou, Hyster-Yale, and John Deere, but we could also share the figures of Caterpillar. They are all communicating on a significant drop in revenue or in order intake in the range of 30%, due to exactly the same factors as the ones that we are seeing on our market. So now we go down the P&L. So first, we comment on the gross margin. Traditionally, that's a parameter that we follow because we are paying our fixed costs with the gross margin we make on products we sell. And this gross margin is increasing in percentage compared to last semester, from 58% first semester 24 to 60% first semester 25. This is mainly due to the stop of Blackster 3 and the fact that now the products that we are selling are Blackster 5 and Blackster Origin, whose gross margin are much higher than the one of Blackster 3.
Regarding the net results of the company, they are impacted by the decrease in revenue during the half year. So the gross operating surplus, which is called EBE in this presentation, was a loss of 0.1 million euros during the half year, compared to 2.3 million euros in 2024. This gross operating surplus includes an amount of 1.2 million euros of capitalized production. It was the same amount in 2024, and this amount corresponds to the development costs of the next generation of Blackster. The EBITDA stands at minus 1.3 million euros and restated with the research tax credit, it stands at minus 0.8 million euros. So the company recorded an operating loss of 1.1 million euros and a net loss of the same amount. So now if we go through the whole P&L, the operating profit takes into account the amortization of Blackster 5 for 1.1 million euros. Blackster 5 is the latest generation of the Blackster, and its depreciation started in January 2025. The operating loss was 1.1 million euros, given the cost structure with no major change compared to last year. The net financial loss of 0.5 million euros mainly corresponds to the interest of the debt for 0.2 million euros. It was a similar amount in 2024, and also the unfavorable impact of Forex during the half year for an amount of 0.3 million euros. So the tax revenue of 0.5 million euros corresponds to the research tax credit of the half year, and we recorded a net result, which is a loss of 1.1 million euros. So note that there was a change in presentation of the items of extraordinary income, which are now presented in operating income in accordance with the new accounting regulation. So the 2024 figures presented here are restated for this change in presentation. So now regarding the cash position. So at the end of June, the cash position of the group is 2.9 million euros. Arcure has generated a positive cash flow from operating activities of 1.4 million euros. So the main contributions correspond to the collection of the research tax credit receivable for 1.5 million euros, representing 2 years, 2022 and 2023. Also, the financing of the account receivables for 1.1 million euros, which is partially offset by the change in the account payables with an impact of 0.5 million euros and inventories for 0.7 million euros. Investments amounted to 1.3 million euros, so mainly corresponding to R&D. And the debt reduction continued to the tune of 0.5 million euros.
Just a comment at this stage because we comment on the activity of the semester and on the strategy. Of course, recording a loss of 1.1 million euro for one semester is not positive, obviously, and it was expected because in July we published a revenue of 6.3 million euro, and knowing the fixed cost structure of the company, it was anticipated that there would be a loss for the first semester. Our efforts now are concentrated on first increasing the revenue, of course, so a recovery of the sales, and we have positive signs for it. And on top of it, given that nobody knows how long this macroeconomic situation will last, we have started and communicated on a savings plan that we started in June this year in order to reduce the fixed cost basis of the company. That is now around 9 to 9.5 million euros on a yearly basis, and is going to be decreased by 1.5 to 2 million euros after this savings plan. So we started this plan in June, and it will unfold month after month to reach its full potential early next year, normally. So that's really what we are doing in order to make sure that whatever the future conditions, we return to profitability as soon as possible. Of course, in this savings plan, we are protecting our strategic assets. So all our AI capacities, our capacity to win OEM markets are protected, and we are reducing our cost mainly in all our capacitory stuff, so production or administrative stuff dedicated to production, and the part of our fixed cost that is not strategic in the team. Next.
So now we can share some semester highlights. So as we publish in different press releases, in the first semester, we have developed a new partnership for distribution. One partnership with Burwell Material Handling, with a large player present in about 30 states in the US. And we are also developing with Cytec. So Cytec is a major network of distribution of technological equipment for construction equipment. So we are already working, for instance, with Cytec in Australia. So now we are developing a Cytec partnership in France, Belgium, and Luxembourg. So we will continue developing that kind of partnership as the kind of product we are proposing, like people safety around construction equipment and around forklift. Is becoming more and more requested by end users, and so therefore we believe that developing that kind of partnership will help us increase the sales. We have also announced recently the approval of Eugenrich of our Blackster camera, Blackster with the AI software camera. And now the integration is performed in Eugenrich architecture. So the system is ready for factory fit as an option. That's a great news because Eugenrich is the number 3 in the world. So they are not very present in North America, but they are quite strong in Europe. The potential of vehicles is about 45,000 units per year. And so we expect this partnership to ramp up as our camera is now integrated in the Eugenrich option and product. We can go to the next slide. So now we will have an overview of our strategic vision for the coming years. So we confirm that we experience the fact that the big players in the forklift business and in construction equipment are now investing more and more on AI in their roadmap. And the good news is that some of them are clearly now investigating potential partnership to complement what they would do internally. So we can check in next slide. So what happens is that we, like it happened in the automotive business, we find that some large players are considering forklift and construction equipment more and more like software-defined vehicles. So they believe that they will be able in the coming years to improve the performance of their vehicle only by improving the software. So keeping the same hardware and getting an update of the software, they may be able to improve the performance or propose some new features. So this is clearly a change in the market that will happen over several years. And we believe that considering our history and our assets, we are able to propose artificial intelligence, embedded AI as a software product to the large players. So we still rely on two strategic pillars. One is innovation, focusing on software and AI to develop new features for productivity and safety. And the second one is to develop partnerships with OEM. So either proposing subsystem to be implemented on their forklift or on their construction equipment, or defining a common roadmap for some features and preparing the future, providing them some piece of technology, of a perception technology as a software bricks. In addition of manufacturers of construction equipment and forklift, we are also starting some talks of partnership with some tier one, so manufacturer of electrical computer unit or smart cameras, because as they are historically manufacturers of hardware, they are interested in software with AI to complement their offer. So we consider the general market a bit less than 2 million units per year. So today we are talking with top 5 players, both in the forklift business and both in construction equipment business. And we believe that we can enhance the potential reachable market with the partnerships with tier one. So here we present the strategic vision we have for our business. So we are still in a very dynamic and fast development of AI hardware and software. So that's great news because as everybody can notice, LLM are developing very fast. So that will bring a lot of potential in terms of features for off-road business. And the good news is that we are also seeing some new hardware available with a higher processing capacity. And as you know, customers are more and more willing now to enhance productivity and safety using AI. So the general context is very dynamic. On our side, we focus on our AI assets, our framework and perception system. So the fact that we have also proven our capacity to send in the field AI features that works for construction equipment and forklift. And we address the aftermarket with a one-stop shop strategy and the OEM proposing a perception technology and helping them to shorten the time to market, to digitalize their vehicle and to prepare the future with new AI like VLLM and AI agent that will bring more and more value over the years. So I think that we have reached the end of this presentation. We are now open for some questions. If you have, we can open the mic.
Yes, Leon Sanders, you can go. Just have to unmute your mic on your side, and you can ask your question.
Can you hear me?
Yes.
Yes.
Okay, great. Thank you. So I would love to get some more information regarding the OEM partnership with Jungheinrich. So maybe you could elaborate a bit about what you think about the unit volumes for this year, so for the rest of the year, and maybe for the next year. Could you maybe tell us a bit about the sales price or the unit price compared to the previous Blackstare or normal Blackstare product?
So you can reach the potential of equipment for which a camera can be installed at You Can Reach is 45,000 per year. Because we will equip a reach truck and counterbalance forklift, etc. We are able to, so we will be able in a few months to have 2 cameras per vehicle. So that gives you the potential in terms of number of vehicles. In terms of penetration rate, it's not so easy to guess, but You Can Reach has worked more than 1 year on this product. So we believe that they expect at least a 10% penetration rate. And then the big question is how fast will be the ramp up for this option. So this is not easy to guess. So that gives you some of the answers on the volumes. Then in terms of price, so we are talking only about a camera with Edge AI in it. So I would say what price indication can we provide? So it's below 1,000 euros per camera.
Okay, great. Thank you. And maybe one more question regarding the profitability or the cost cutting. Do you expect to reach profitability again for the second half of 2025 or just for 2026?
It will depend on the revenue, obviously. If we recover in terms of revenue, it's definitely a yes. If we stay on this kind of very low activity like the first semester, it will take more time because the savings plan will unfold over 6 months. We started in June. We already have realized all the savings in procurement and in foreign HR. For France, it's a little bit longer because there is a whole process to follow, and the compensation when you do some layoffs is higher than in other countries. So now at this stage, we've reached half of the savings, in approximately half of the savings, and we're going to reach the complete savings plan early next year, to be clear. So in terms of savings, it's only next year. And in terms of revenue, it's a little bit early in the semester to anticipate what will be the revenue. But we expect some kind of recovery. What's the extent of the recovery? It's too early to tell.
Okay, great. Thank you. That's it for me.
All right, so we're going to stop this conference right now. Thank you very much. Have a good rest of your day.
Thank you.
Thank you. Have a nice evening. Bye-bye.
Thanks. Bye-bye.
Thank you.
Bye-bye.